Thanks for joining us at lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get you the headlines. The Nifty and Sensex trade with little change. Pharma shares decline while Titan hits an all-time high.
Tata Chemicals will transfer its salt, spices and pulses business to Tata Global Beverages that will be renamed Tata Consumer Products.
India's trade deficit widened to a 5-month high of $15.33 billion in April. Export growth slowed amidst weakening global trade.
The Election Commission has barred campaigning in 9 constituencies in West Bengal after incidents of violence between the BJP and the Trinamool Congress workers.
All right, let's first start with the look at the markets. Yatin is here with us. Afternoon, Yatin.
Afternoon, Neera, and today we are almost flat on the key indices. In fact, as we speak, we are only 5-7 points up on the Nifty. Advanced decline ratio also on the Nifty 50 is 1:1. Now, if you look at the gainers list, that's a few stocks which have been beaten down. Tata Motors and Adani Ports, the stocks which have corrected in the last few trading sessions are witnessing some bit of bounce back. In fact, Z is up 5% as we speak at the day's high. Infosys and JSW Steel are the other counters which are up nearly 2% each. As far as losers are concerned, Yes Bank, Sun Pharma, Coal India, and the pharma pack in general. So we have the likes of Sun Pharma, Lupin, Dr. Reddy's. All of these stocks are down in the red. However, if you look at the stocks in focus, Tata Chemicals and Tata Global, both of these stocks are 8% up each. Last time I checked, they are holding out to the gains that they made in trade. In fact, Tata Global in the last half an hour, 45 minutes of trade, we have seen significant amount of volume pickup. In the counter. As far as the mid-cap end of the market is concerned, we have Idea Cellular, Reliance Power, Suzlon, Dish TV. All of these stocks are down in trade on decent volumes. 2 to 3% is the kind of declines that all of these stocks are showing.
Yes, and thanks for that. The Tata Group has decided to house all its food brands under one roof. Tata Chemicals will transfer its salt, spices and pulses business to Tata Global Beverages, which in turn will be called Tata Consumer Products. Sajid is here to explain if this deal has been done at a fair value. Sajid.
That's right. Before we go into whether it's been done on fair value, let's look at the consumer business as a whole. It had a revenue of nearly 1,800 crores, growing at 25 to 30%, and the company Tata Chemical at this point in time saying that they want to reach 5,000 crores in the next 2 to 3 years. That means we are looking at 30 to 25 to 35% growth every year on the revenue front. Based on that, for FY20 you're going to look at a 2,400 crore revenue and with an EBIT of nearly 480 crores and PAT of nearly 360 crores. That gives a price to earning multiple of 16.1, which is pretty much a big discount to the current consumer companies which are available in the market. Now, as a whole, if you look at it, need to look at from the buyer, seller and the common shareholder point of view, which is the buyer in this case is the Tata Global Beverages. For them, it's a very good steal in that sense because it adds to the portfolio, bringing in salt, spices and other FMCG pulses, and going forward detergents and others which will come in. And that would mean that for them it will be a re-rating of the business. It is estimated that by 2020 for financial year they will have more than 10,000 crores of revenues and profitability of more than around 1,000 odd crores. That gives them EPS of 10.36 on a consolidated basis, which is accretive from the shareholders point of view. And that is important here because typically mergers involve dilution in EPS for the existing shareholders, but in this case there is an accretion which is coming in, so there is a likelihood that going forward there may be a re-rating of Tata Global as valuation catches up with the new businesses being added. From Tata Chemicals point of view, consumer was a very high growth business. The other businesses which are left is basic chemistry, specialty, and then they're planning to enter into nutraceuticals and lithium-ion batteries. These are something which will go over the 3 to 5 year period. But the main business still continues to be salt, which the manufacturing will be with Tata Chemicals itself. They will be selling that to Tata Global Beverages on a 25-year contract for a fee, which they will be doing. So the cash cow will remain with them because salt being a byproduct of soda ash, which they are into. But from a growth perspective, their PE will come down to sub 10. and that would be a de-rating for Tata Chemicals over a period of time, because it will be more of a commodity. Brokerages like Deutsche Bank have said that the entry into nutraceuticals, or for that matter lithium-ion batteries, would be ROE dilutive for in the near to medium term, and so they're not so bullish on that part of it. So that's one. From third fund is the Tata Sons. For them, they have nearly 30% shares stake in both the companies. So it's equity for them from the consolidated Tata Consumer Products Limited, which is a new company, and on the other side, Tata Chemicals standalone minus consumer, and consumer, if you add together, the EPS is going to be accretive for them. So it's a neutral transaction as far as Tata Sons is concerned.
What about Tata Chemicals shareholders?
For Tata Chemicals shareholders, over a period of time, the valuation, currently it has a PE of nearly 12 or so, it will come down to 8. So there will be a de-rating that may happen over a period of time.
But they will get some shares from...
But they will get shares of Tata Global, which beverages. So together it may be, but for on a standalone basis, the Tata Chemical valuation, will come down.
Sajid, thanks so much for that. After automobiles and consumer durables and staples, it's now the quick service restaurants which are feeling the pain of a slowdown. Two of the country's largest fast food chains, Domino's and McDonald's, have reported slowdown in same-store sales growth. Agam Vakil is joining us with the details. Agam.
Well, that's right. Well, what we have seen for the first time in 6 quarters is single-digit growth, same-store sales growth for McDonald's and Domino's, two very dominant players in the quick service restaurant sector in India. As you can see, over the last 6 quarters, well, same-store sales growth has not only been in the double digits, but it's actually been over 20%. And over the last 4 quarters, well, after that, we've seen that come to the levels of as much as below 10%, 6% and 5.7% to be precise for Domino's and McDonald's, well, respectively. Let's take a look at what are the challenges that have been in this particular quarter, and there's no doubt about the fact that there has been a high base, considering we're looking at about over 20% growth for both these companies. But let's not forget there certainly is also a little bit of a slowdown when it comes to discretionary demand, which is evident in several other consumption companies as well. There's also been a steep rise in employee costs, but that is, well, natural considering they have been on expansion mode. That said, there are also a few factors that are, well, in favor of some of these QSRs. So we do have store expansions which are on track, and that has kept sales buoyant. Let's not forget that when it comes to some of your other costs, including inputs, well, they have been fairly stable. So there has been no real pressure when it comes to gross margins. When it comes to other, costs such as marketing, that's been reduced. Rental costs are relatively stable considering the price of realty in times of today. But when it comes to the outlook going forward, the managements are not completely ruling out a slowdown, but they aren't ready to acknowledge the slowdown just yet, because they're suggesting they want to wait for another quarter before we actually start seeing a considerable trend. That said, they are expecting new stores, formats, and of course products to provide at least some amount of growth looking forward. But one more quarter is what managements are suggesting before they can call this a proper slowdown in the quick service restaurant sector.
Agam, thanks for that. The largest retailer of consumer goods, Canteen Stores department, saw its growth stagnate in fiscal 19, but it's not entirely because of a slowdown in demand. Shalini D'Souza is standing by to tell us what's actually caused a slowdown in growth or a decline in growth.
Yes, Harshana. CSD sales in FY19 came in only 5% higher at 18,900 crores. Now, FMCG sales were up only by 4%, which came in at 6,600 crores. Now, revenue from food items stood at a little over 3,100 crores, while household and personal care product sales contribution stood at 3,564 crores. Now, liquor sales and automobile sales were the ones that witnessed an increase. Now, liquor sales were up by 15% at 3,000 crores, while while auto sales were up by over 40% and came in at 5,940 crores, 5,490 crores, sorry. The budget allocated in FY20 is 18,000 crores, which is compared to 17,000 crore in the previous year. Now, the reason FMCG sales have stagnated is not because of a slowdown in demand, but because CSD had imposed restrictions on the amount of items that can be procured in each category, which is over and above the monetary restrictions that already existed.
All right, Charlene, thanks so much for that. Let's go on. Qatar Airways has made a formal offer to increase the number of flights to and from India, at least till the Jet Airways slots are reallocated. Anurag of Bloomberg News joins us with the details. Anurag.
Yes, so Qatar Airways has formally requested the Indian government to increase the seats between the two countries so that it can fly more passengers in and out of India, especially on very busy routes like New Delhi, Bangalore and Mumbai. Although Qatar does not directly refer to the closure of Jet Airways or the temporary grounding, as they call it, of Jet Airways, it does say that there's a sudden capacity crunch in the sector and there's a need for more flights. Remember, there are 7,000 Indians living in Qatar, and because of an economic blockade on the country, it's very difficult for Indian passengers to take a connecting flight to Qatar via different airlines. So what Qatar has been saying is that to help those 700,000 Indians to keep the capacity going in the market, the Indian government should at least temporarily allocate some more routes to them. At the same time, it's very important to remember that Qatar Airways has always wanted to start a domestic airline in India, and it has said that it is studying the FDI policies of the Indian government before it can formally do something about it. But this kind of a move, if the government allows it, it will definitely give Qatar Airways a bigger share of the market in India. So we'll have to wait and see what the government says.
Anurag, thank you so much for that. To the big earnings of the day, Bajaj Finance will come out with its fourth quarter numbers today. Investors will be keenly watching out to see if the non-bank lenders manage to remain unscathed by the pain in the system. Shefali Malik is standing by with the estimates on Bajaj Finance. Shefali.
Well, a steady and strong set of earnings we're expecting from Bajaj Finance, almost a 50% profit growth on a YY basis and about a 38% net interest income growth. From them, we're expecting AUM growth of about 5% on a sequential basis and 37% on a YY basis, even though sequentially that'll be slightly slow pace of growth, but that's more because of the seasonal factor. It's expected to remain unaffected by the ongoing NBFC crisis, and they're expected to be one of the best performers in the current amidst the current environment. Even the incremental cost of funds are expected to come off from the Q3 peak that we saw, but despite that, the margins are expected to be slightly lower, but that again due to the seasonal factors. The cost to income ratio is expected to decline to about 35% versus about 39% in the same quarter last year. That's because of the strong efforts that the company put in this direction. Other than that, we'll watch out for their market share gains, and also we'll watch out for their the loan book composition, whether they're at what pace they're growing in each of the segments and how much they're picking up in the housing portfolio, and where does the consumer portfolio stand at. So overall, it's expected to be a good set of performance from Bajaj Finance this time around as well.
All right, thanks, Shefali. Let's move on to economic data. India's trade deficit widened to a 5-month high in April. Imports were higher because of oil prices rising, but also there was an unanticipated slowdown in exports. Pallavi Nahata reports.
India's trade gap widened to a 5-month high in April due to lower growth in exports. This was as global trade weakened and tensions between US and China rose. The gap between India's imports and exports stood at $15.3 billion in April compared to under $10 billion in March. The trade deficit was also higher than analyst expectations. Exports grew just 0.6% over last year to $26.1 billion in April. In March, exports were significantly higher at $32.5 billion. Imports rose by 4.5% in dollar terms on an annual basis. They stood at $41.4 billion in April, down from $43.4 billion in the preceding month. While weak global demand conditions continued to drag down exports, non-oil, non-gold imports continued to contract, reflecting weakness in domestic demand conditions. Among major exports, growth in ready-made garments and gems and jewelry contracted. Petroleum product exports, drugs and pharmaceutical products exhibited positive growth. Among major imports, growth in oil, gold and electronic goods was positive, while organic and inorganic chemicals and precious stones continued to contract. The decline in capital goods was because of continued weakness in the capex cycle.
All right, is the export slowdown about what's happening in the global economy, or is it because of local factors? Crystal D.K. Joshi believes that it's the latter.
Despite global economy picking up in 2017, our exports were still not doing that well, and I think that's largely because of domestic issues, which particularly related to refunds and liquidity, which did not allow exporters to take advantage. There could be another opportunity coming out of this trade war, which is because of the trade wars, there could be trade diversion, and India. Some of the production units could be planning to move out of China, diversify into other economies, and India would be in the radar of the economies where it could be moved. So I think if we make our policies more conducive.
In politics, the Election Commission has decided to curtail campaigning in 9 constituencies which go to polls on Sunday. In West Bengal, campaigning will have to stop by 10 p.m. today. The decision has created quite a stir among the opposition parties who have accused the Election Commission of being partisan, since the Prime Minister is scheduled to hold 2 rallies in the state today. The Commission, while citing the violence which broke out during Amit Shah's rally in Kolkata, has also removed 2 senior officers in the state.
This would probably be the first time when ECI has invoked Article 3 to 4 in this manner, but it may not be the last in cases of repetition of lawlessness and violence which vitiate the conduct of polls in a peaceful and orderly manner. Election Commission of India is deeply anguished at the vandalism done to the statue of respected late Sri Ishwar Chandra Bandyopadhyay, who was conferred the title of Vidyasagar by Sanskrit College, Kolkata. It is hoped that the vandals are traced by the state administration.
এতই যদি গার্ডস থাকে তো আজকে সন্ধ্যা থেকে বন্ধ করে দিতে পারতেন কেন? কালকে নরেন্দ্র মোদির 2টো মিটিং আছে বলে। কালকে নরেন্দ্র মোদির 2টো মিটিং আছে বাংলায়। নরেন্দ্র মোদির যখন মিটিং শেষ হয়ে যাবে তখন অন্যদের প্রচার শেষ হয়ে যাবে। Is it democratic decision? Unconstitutional, unprecedented, unfair, political bias decision.
Out of time on this show. Thank you so much for joining us.